interesting to see where the markets are moving. Just don't get too afraid. Don't put too much importance on your portfolio right now. If you're invested and you're thinking about getting out, you've got to answer two questions. You've got to be right twice. You've got to be right about when you get out, and you got to be right about when you get back in. And what I would suggest is that if you're even considering getting out right now, you probably should not have ever been in. Can't go back and change that, but what you can do going forward is to figure out what kind of strategy that you're going to use, because you now have to decide what you're going to do to grow your money. The market is probably not a good option for you if you want to get out, unless, because if you look at the headlines back in November and December of last year, nobody was talking about getting out. Everybody was talking about how great the market was doing. When things started to drop off, nobody got out. I mean, there were some people that started to get out, in the beginning of this year, but the market went down, then it recovered. Then they probably thought, well, now's a good time to get back in, and now it's going down even more. So the question that you have to answer is, where are you going to go if you get out? Are you going into treasuries? Are you going in the fixed income market? Quite a bit of money is starting to flow in that direction right now, but you've got 10-year treasury yields under 3%. So when you factor that in with inflation, we always want to look at the real rate of return. So nominal rate of return is just one thing. So if you're buying a treasury and you're getting, you know, uh, 3%, let's just say, on that treasury, you know what kind of income you're getting. But if your return is 3% and inflation is 8.5%, which I'm expecting, we have not peaked out with inflation yet. I mean, I just don't see how that's possible when we can continue to see national uh, average for gasoline prices continue to go up and up and up, higher and higher and higher than they were in April. We know what's happening with food. We know we're spending more money when we go to the grocery store. We know we're spending more money when we go out to eat. So I don't think that inflation has yet peaked. I think we're still going to see some strength there, unfortunately. So, your real rate of return in a fixed income investment, if you can get 3%, is now negative 4.5, or negative 5.5 if inflation is 5.5%. So you have to be cognizant of what's happening, and then you have to factor in taxes as well. So if you're getting 3% interest and you're in, let's say, the 22% tax bracket, you've got to pay, as long as it's not in a qualified account, you've got to pay taxes on that interest that's coming in. So your real rate of return is whatever return you're getting minus your taxes minus inflation. So that doesn't leave many places to go right now.